And good evening. We are doing it live right here in the 5 o'clock hour in Los Angeles. Mottek on Money, 5 nights a week for you, live right here in 790 KBC, streaming live online worldwide at kbc.com, and the on-demand Mottek on Money podcast at kbc.com, Apple, iTunes, all your favorite podcast platforms. And yes, we're on the socials too. Stocks moving sharply higher today, up for the third day in a row now, following the latest July job openings report that basically showed more evidence of a cooling job market out there and potentially more support for an eventual easing of rate hikes by the Federal Reserve that now ended up coming up for a closing gain of nearly 300 points. The NASDAQ up 239 and the S&P 500 up 64. The latest report on job openings in July retreated to a two-year low while fewer workers were quitting. Job listings dropped to 8.8 million, lower than was expected. Meanwhile, 3.5 million people said take this job and quit their jobs in July, the lowest level in more than 2.5 years, a sign that job seekers are getting more cautious. Consumer confidence also, new report out today, down in the month of August, according to the Conference Board. Not a big surprise as we see gas prices go up. Usually consumer confidence goes down. Bond yields back in focus, and looks like mortgage rates still hovering near 20-year highs. We'll get an update on what's happening with mortgage rates and real estate tonight with Jeff LAZERSON, the president of MortgageGrader.com, and also Orange County Registered Real Estate columnist. We got new readings on home prices today from the authoritative S&P CoreLogic Case-Shiller 20-City House Price Index, which includes the Los Angeles area, San Diego, and San Francisco. We'll be taking a closer look at that coming up later this hour. NVIDIA at a new high. Yep, NVIDIA, which, of course, has been riding the AI wave, rallying as much as 5% today to an intraday high of 490 and change, and closed up more than 4% at 487.84. NVIDIA did walk back some gains following its blowout earnings report last week. Taking a look at what else is happening, Apple back in the spotlight. Looks like Apple is set September 12th now for its big consumer products event. Once again, Apple likely to debut 4 iPhone models at the fall event on September 12th, and Apple stock moving higher by about 2%. Coming up, we'll take a look at what's happening on the crime front this evening. The smash and grab robberies continue. A special task force has been set up, including Los Angeles Police, the LA County Sheriff's Department, as well as some federal agencies, the U.S. Marshal Service and FBI, as well as the Beverly Hills Police Department. The police chief of Beverly Hills, Chief Mark STAINBROok, will be joining me live later this hour to talk about what's happening. But first, on the markets, the economy, your money, and what's happening today. Let's bring in Jonathan HOENIG now, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Also on Twitter at Jonathan HOENIG. Jonathan, great to have you with us here. Thank you very much for taking the call, and love your Twitter postings as well. Take it from the top and give us your reaction to this rally we've seen here.
Well, Frank, it's been a heck of a rally, and interestingly, it's been a rally in a lot of those stocks that have been most beaten down, and particularly technology. I mean, the NASDAQ up sharply today. I have to say, though, count me as skeptical. I mean, for one thing, you don't have to buy the bottom of the move in order to make money on a move. And if this really is a substantial rebound in the NASDAQ and technology, we're just getting started. But count me as, I should say, somewhat of a naysayer. For one thing, Frank, the breadth is still very poor. Today you saw 130 new lows, only about 100 new highs, and a majority of stocks are still below their 50 and their 200-day moving average. So the trend is still down. And Frank, despite the JOLTS report here today, I still think that the move for interest rates are going to be up. The big move is still to the upside when it comes to interest rates. In fact, the only ETFs that are working now are those that feature adjustable rate or floating rate coupons. So I don't think we're out of the woods just yet. I think rates are going up, and I think caution is still warranted despite a pretty substantial move in the last couple of days for stocks.
Right, and it was just a month or two ago that soft landing scenario seemed to have been propelling the market higher, and then a bit of a hiccup, the Fed raising rates, and now talk of more rate hikes, and the Fed chairman himself has said inflation is still a problem. Where do you see this economy go from here in the face of what we're seeing here today?
Well, interesting stat from Bespoke Invest earlier today, Frank, and just in terms of what unusual times we're in. In fact, we've been talking about this inverted yield curve for months now, and according to Bespoke, we're just now 11 trading days away from breaking the record for the lengthiest yield curve inversion in the last 60 years. So, we've talked about that for months now. That is an early warning indicator, an almost 100% indicator of a recession, of slower times in the economy to come. And, I'm not giving up on that history just yet. I still think that now is a time for caution. I think you can put money to work now. In fact, now is the time, I think, finally, Frank, to look to those overseas names, names like the emerging markets especially. They were outperforming today, even as the rest of the market was stalling. So, I think you want to be cautious. You don't want to put all your money in at any point, but look for these unique areas, these oddball areas off the radar screen. That's where you're going to make money in the coming months.
Speaking of overseas and of stalling as well, VinFast, this is a Vietnamese electric vehicle company that has its West Coast headquarters here in Los Angeles, by the way. Looks like the stock has taken a wild ride. Shares of the Vietnamese EV startup snapped a 6-day winning streak and plunged 44% today, wiping out some $90 billion in market value. VinFast trading here in the United States and moving sharply lower. Any thoughts about that one in particular and the EV stocks in general, which have seen a wild ride this year?
Well, I'll tell you, look, when it comes to anything technology, you always got to be ready for a wild ride. And when you're talking about emerging markets like Vietnam and technology, Frank, that's double the volatility. But I think in terms of Vietnam, I can't speak on that particular company, but I in fact think places like Vietnam, like Egypt, that's exactly, in fact, where you want to be looking right now. There's an ETF, which is VNM. That's VNM. We own it over at capitalistsPig.com. I think you can buy that right now. Same thing with Egypt, EGPT. These are extraordinarily inexpensive markets, Frank. They're volatile, but I think if you're putting money to work right now, these are going to make you more money in the next couple of years than, even NVIDIA or Apple or some of those favorite old tech names.
All right. NVIDIA certainly on the bingo card tonight, hitting an all-time high. We've been watching that one rise this year on the AI craze. What is your assessment of NVIDIA here and the other AI-related names?
Well, I think that the all-time high is, about $502 a share. It's right up near there, Frank. And we saw even Google, same thing today, at a new 52-week high. The trend is certainly with these names. What I worry about is two things. A, the story being out. This is truly front page news now about AI. Doesn't mean that the momentum can't continue, but I think we're more like in perhaps inning 7 or 8 rather than earning 1 or 2. And the other is simply exposure. There's the highest exposure among hedge fund and other aggressive funds, Frank, now in terms of their exposure to big cap technology stocks. So, I still think that there's bigger fish to fry here, and I think there's bigger risk. You talked about that issue with the inverted yield curve. Well, bonds are down once again. Rates are going up once again, Frank. And if this repeats itself, if bonds are down for a third straight year, this has never happened in history. Bonds have never been down for 3 straight years. So to me, that's just a harbinger, a warning sign that something's wrong with credit, and it makes me really loath to put too much money to work, even with the market going up.
Something is definitely going on, and that's why we have you on and the other top names in the business world to explain it as best as possible, given those recent downgrades, including of Uncle Sam's credit rating, the downgrades of Fannie and Freddie, and then the bank sector also downgraded, and possibly more to come. What is going on with all that?
Well, it's debt. It is absolute debt, Frank, and that I think that the debt kind of genie is going to come back to haunt us. In fact, one of the trends you're starting to see emerge right now is the reemergence of some of the commodities-related stocks. Gold and platinum have been up sharply in the last couple of days. We talked about uranium, which isn't exactly an everyday commodity, but ETFs like NLR and URA, any of those uranium-related ETFs, I think you can buy now. So, debt, I think, is really going to come back to haunt those. And, of course, the U.S. is a top of the list when it comes to debt. So I think, this issue of the dollar and higher interest rates, I can't say it'll be a complete repeat of the 1970s, Frank. I can't predict the bell bottoms, but I do think you'll see the higher rates, the higher commodity prices, and the lower value of the currency, almost exactly what we had in the latter half of the 1970s.
All right, well, what about disco then? Right? We need it.
Disco is
it made it. It helped us get through it. Yep, and the Partridge Family. I think the market hit rock bottom when the Partridge Family was on and bounced back from that. So thank you to the Partridge Family while we're thinking of them. What about the price of oil here? We got that hurricane in the Gulf of Mexico. Already oil production, of course, has been disrupted, as happens all the time when we have a situation like that. Oil above $81 a barrel here. Consumer confidence down with prices here at the pump soaring. Give us your assessment here on where gas and oil prices go from here, Jonathan.
The trend is higher for commodities now writ large, Frank. So I think any of those oil ETFs that we've talked about in the past, I mean, XLE is the broad one that owns a lot of those big oil stocks. OIH is the oil services ETF, but I think this is a broad area that continues to tread higher. And what you'll often see, Frank, is over big moves, there's a number of reasons why, if you will. I mean, now it's the hurricane and the oil storm. In 3 or 4 months, it could be the weaker currency or higher demand. So, keep an eye on price, as we always talk about. Price is primary. I think, unfortunately, for our listeners, they're going to be paying more at the pump, even more in the weeks and months to come as oil prices head higher from here.
A lot of people went to the movies on Sunday. It was a National Cinema Day, so AMC was back in the spotlight. It looks like it hit a new low. Is that right?
It did, Frank. I mean, AMC, and incredible. 2 years ago, we were talking about, this stock being up thousands and thousands of percent. I mean, and how things have changed. All of that pandemic-related euphoria has completely worn off, and not just AMC, but a lot of those meme stocks of the era. It has lost all of that 1,000% gain. So, it kind of goes to show you have to, go where the action is, Frank, follow the price. People who had bet on, AMC going to the moon have lost the thousands and thousands of percent. So you always got to be looking forward. I think pharmaceutical stocks, actually, I mean, it's certainly not as exciting as a meme stock, but a name like BMY, that's Bristol Myers Squibb, BMY, not particularly sexy. I think you can own that right now, Frank. But you have to keep an eye on the prize here, as we say. And
mix a little sports analysis, pop culture, and great interviews, and you've got the Rich Eisen Show podcast.
The Jets are bracing themselves into doing Hard Knocks this year.
Bracing themselves. Look, coaches want to control the controllables. They don't want to have a camera crew in the building. I know that they want to lie low. This is what happens when you go and swing for the fences and get Aaron Rodgers. Are you kidding me?
The Rich Eisen Show podcast, wherever you listen.
Pretty amazing to see AMC, which had been up, thousands and thousands of percent, give it all back in just the span of 2 years.
On there live with Jonathan HOENIG, and you have a list of ETFs. Any specific places here, Jonathan, where you are putting money now and or taking it off the table?
Yeah, I mean, as I said, I think you want to take risk, Frank. You always want to try to take risk. Take it in a reasonable way. So I'm really hot on emerging markets right now. We talked about Egypt. We talked about a few of the others. I think you can own India. SMIN is one I like quite a bit in India, and some old school telecom names, Frank, like AT&T, which is ticker symbol is T, or Korea Telecom, KT. Those are as well I think you can put on your list. So don't be afraid, I think, to look overseas. As the market was rallying today, the dollar was dropping hard. So I think that's the place you're going to want to be looking right now, these assets and names that can do well as the dollar declines. Commodities, higher rates, and a weaker dollar are the place to be.
On there live with Jonathan HOENIG. And what about Apple? They are coming out with the new iPhone, looks like on September 12th, that big fall event that they always have, expected to debut 4 new iPhone models at this event. Apple stock has been riding high this year. What about Apple?
Yeah, I mean, what an amazing move, Frank, from, about 140 all the way up to nearly $200 a share. It's come back down to 170, and it's certainly kind of been making a move. Look, you've never made money betting against Apple, and despite the fact I'm really concerned about big tech, cap tech overall, I certainly would not step in front of Apple ahead of this event. I mean, Frank, these are really miracle makers when you think about it. All the technology that makes their life better comes from Silicon Valley, comes from those geniuses. So I would be loath to short Apple ahead of that event. Who knows what exactly the response is going to be to the new iPhone. So I think you got to be a big fat hold on Apple ahead of that new iPhone event coming up next month.
There are a lot of excitement around that always. And as far as the retail sector overall, shrinkage has become the big word, euphemistically known as shrinkage, essentially shoplifting. And and losses primarily due to that these days. We've heard from a bunch of big company CEOs about how this is impacting the bottom line, billions and billions of losses at this point. And, of course, those high-profile videos here in this area in Los Angeles, you've probably seen them nationally. Jonathan HOENIG, what about the retail names here and where things are going given what's happening out there?
The best retail name right now, Frank, is actually TJ Maxx. That's TJX. It's up almost 20% in just the last 6 months. We talked about Walmart. I think that's the one you can own as well. Unfortunately, I think that terrible is a crime, which is impacting, first of all, Frank, impacting our quality of life. I mean, how terrible for our country that we're facing this type of street crime. More than anything, I think it's going to hurt the property owners more than anything. So I think you're going to avoid real estate writ large. The higher rates are going to impact real estate as well. But I think the two best retailers right now, Frank, Walmart and TJ Maxx, WMT and TJX are the best retailers to own in terms of stocks for your money right now, in my opinion.
Right. Can you imagine if the economy wasn't good and what it would look like, when we see what's happening right now at these stores. Constantly been repeated, the economy is doing so great, and then these horrific shoplifting and mayhem scenes playing out at the stores out there.
Yeah, I mean, it's such a terrible harbinger, unfortunately, Frank, of things to come when you see the major stores abandoning, certainly Chicago, San Francisco, so many of the formerly just glamorous and wonderful downtowns. It's a very worrisome sign, I think, in terms of the economy and investments. When you see some of that, as you said, mayhem and so many of the great industrial centers, and big companies pulling out. Hard to put money to work when you're seeing, street crime, as you said. But I think there's never want to bet against this country, and hopefully, in time there'll always be places to make money. Even despite some of the politics and turmoil on streets today.
Right, and certainly it also has to rattle consumer confidence when you have kids and families watching this kind of activity happening at the local shopping malls here.
No question. I mean, that's the irony, Frank, is I'm avoiding names like Citigroup and Bank of America. Some of the American banks, for example, again, it sounds kind of out there, but some of the Latin American banks, BBAR, BBVA, again, I think to that period of time from basically 2001 to 2010 when U.S. markets were, rather flat. But a lot of those emerging markets and international names did well as the dollar fell. So, I don't bet against the America, but I think you want to kind of cast a wide net as there's so many problems, not just in the market, in the economy, but as you said, Frank, even on the streets as well.
Jonathan, thank you very much for taking all the questions here tonight and for that comprehensive update and your view on the markets and the economy. That is Jonathan HOENIG, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book, Price is Primary, How to Profit with Any Asset in Any Market at Any Time. You can follow him on Twitter at Jonathan HOENIG. Jonathan, thank you very much for taking the call live with us here tonight.
Always.
Thank you very much, Jonathan. And coming up, we'll talk real estate with Jeff LAZERSON, the president of Mortgage Grader and Orange County Register real estate columnist. That'll be coming up. And later this hour, I'll be speaking live to Chief Mark STAINBROok, the chief of the Beverly Hills Police Department. That and more straight ahead. Folks, I'm not exaggerating when I say this. QC Kinetics can change your life. You can live again without that chronic joint pain and without drugs or surgery. It's Frank Mottek here. QC Kinetics is advanced regenerative medicine. They take your body's own concentrated healing properties and put them right into your joint to restore and repair that damaged joint tissue that's causing all of that horrible pain. The patient satisfaction reports are astonishing. Finally, a real alternative to the old ways of dealing with pain. And unlike surgery, there is no downtime with QC treatments. If you have constant pain in your knees, hips, shoulders, or back, you need to call and get a free consultation from the medical professionals at QC Kinetics today. Imagine this autumn moving around pain-free, doing the things you love again, walking, hiking, playing with your grandkids, you name it. Call QC Kinetics and see how the latest advances in precision regenerative medicine can attack your pain and bring you lasting relief. QC Kinetics, locations in Glendale, the city of Orange, Mission Viejo, and now also in Costa Mesa. Call 213-997-PAIN. 213-997-PAIN. Again, that's 213-997-PAIN. 790 KBC welcomes the Monkees, celebrated by Mick Dolenz, coming to the Libby Bowl on September 15th. Tickets are on sale now at AXS.com. Right now, caller 9 wins at 1-888-790-5222 and get a pair of tickets to the show. Yep, the Monkees, celebrated by Mickey Dolenz. Caller 9 wins. Call now, 1-888-790-5222. Mottek on Money continues here on 790 KBC. We have a winner for the market today, 3 days in a row. A winning streak here with the Dow up nearly 300, up 293 at the close at 34,853. The S&P 500 jumped 64 at 4,498. And the Nasdaq gained 239 at 13,944. The yield on the 10-year note now at 4.12%. It has eased a bit, but the damage has been done with mortgage rates still hovering near 20-year highs. I'll talk about that and more on real estate coming up shortly with Jeff Lazerson, the president of MortgageGrader.com. The price of oil hovering around $81 a barrel. And guess what? Prices are rising at Southern California gas pumps. Regular now averaging $5.37 a gallon. Premium now at $5.70 a gallon on average, and diesel at $5.95 a gallon on average. Can you believe it? Gas prices higher than they were a year ago at this time, 9 cents a gallon higher than a year ago. And believe it or not, 30 cents a gallon higher than where they were just a month ago. Taking a look at the cryptos here tonight, we see a Bitcoin down about 7 at 27,588, Ethereum down 4 at 1,724, and Doge at 6 cents. Friends, looking for legal help you can trust? Look no further than attorney Clark Fielding and the Fielding Law Team, your go-to destination for top-notch personal injury legal representation. Fielding Law understands that life can take unexpected turns, and you need a strong legal team to stand by your side. Now, if you've been hurt in an accident that was not your fault and need help with a personal injury claim to obtain justice, Fielding Law is here to fight for you. Accidents happen, but you don't have to face the aftermath alone. Fielding Law's experienced attorneys are here to guide you through the legal process and ensure you get the compensation you deserve. Medical bills piling up, lost wages due to injury? Don't worry. Fielding Law specializes in personal injury cases and works tirelessly to recover your losses so you can focus on healing. The Fielding Law Team has a proven record of success. They've helped countless clients secure fair settlements and win in court. You can trust Fielding Law to provide you with the best legal representation possible. If Fielding Law takes your case, Clark and his team of sharks will personally work with you, fighting hard for you to receive all the compensation the law allows. Call Fielding Law for a free case evaluation. It costs you nothing to get that honest opinion, and do what I did. Put Clark Fielding's number in your phone under the word accident. Hit it when you need it. 833-88-SHARK. 833-88-SHARK, or go to clarkthesharklaw.com. Mottek on Money continues here in 790 KBC. New readings on real estate out today. This time the S&P CoreLogic Case-Shiller 20-City Home Price Index coming out, showing home prices ticking higher from May to June, up 0.9% in the Los Angeles area, but down 1.8% over the past year. In San Diego, prices higher by 1.1% month to month, but down 2.5% over the past year. San Francisco seeing a slight gain of 0.1% month to month and down nearly 10% over the past year. This as mortgage rates continue to hover near 20-year highs. Let's bring in Jeff Lazerson now, the president of MortgageGrader.com, with a laser focus on the rates and also real estate. He's the Orange County Register real estate columnist. Jeff, thank you very much for coming to the line. First of all, how are the rates looking here this evening?
Frank, they're steady. Nothing great, nothing bad. The 30-year fix today is at 6.75% at one point, so that's up to $726,200. The 15-year fix is at 6.38% at one point. The high balance, so LA and Orange County, $726,201 to $1,089,300. The 30-year fix is at 6.78% at one point. And then a little bit of this inverted yield curve situation. The 15-year high balance is actually higher, and I don't recall ever seeing that before. 7% at one point on a high balance 15-year, 6 7/8 for a 30-year high balance. Jumbo rates are at 7.25% at one point, and VA is at 6.25% at one point. FHA is at 6.625% at one point.
All right, and where do you see the rates go from here?
Well, Frank, I think they're going to go up a little bit more. And in fact, if you're a moderately qualified borrower, say you're under 700 FICO score, you're already at 8% today. I was pricing something out for somebody with 20% down. 8% if your credit score is not over 700. So I would say 30-year fix is going to go up a little more. We still have this inflation problem. Gas prices are up. Food prices are up. The labor costs are up. So I just don't see it ending anytime soon. But I will tell you, Frank, when it ends, it's going to end hard and fast, and rates are going to drop like a rock. It could be 6 to 18 months, but they're going to drop hard and fast when they do drop.
All right. In the meantime, home prices ticking slightly higher in the last month or so, according to the latest reading we got from the CoreLogic folks based there in Orange County as well. What do you see ahead on home prices, and what's your reaction to what we got today from CoreLogic?
Well, I think the home prices are sort of at a tipping point, and it's sort of a non-obvious reason for that. I mean, obviously rates are going up, but the non-obvious things are like Fannie Mae, for example, the blacklist for their condos, the condo complexes that Fannie Mae won't do. There was 1,414 of those on January 30th of 23. I just checked before your show, and as of August 14th, there was 2,043 condo complexes that you cannot get a good Fannie Mae loan on, a 44% increase in 7 months or something like that. Incredible. Today we got news that the fog the mirror loan, that's the loan that really, literally, you just have to be able to fog the mirror. It's good credit score, 700 or better, 20% down. We are down to exactly one lender that's doing those now. Another one left the market yesterday, and the rate for that one lender is north of 11%, and you have to have 2 years payments reserves to qualify for that loan. So that's another just a really nasty situation. Another thing that's going to be a strain is student loans. You know, starting this Friday, Frank, the college student debt is back on, no more free lunch, and so that first-time buyer, those folks that have student loans, they're probably out of the market to be buying something. So for a lot of those reasons, and then probably more than anything else, the lenders are going to start crashing more and more. Fannie is doing all these buybacks. They're finding things like they didn't dot their I or cross their T. They're making performing loans that lenders had that were at 2 or 3%. They're asking lenders to buy them back. I've heard a lot of gripes about that from lenders, and it's a big financial hit for the lenders. Plus, there's no business out there, so lenders are bleeding. Only the big are going to survive. So I think that's another constraint on people being able to finance homes.
Pretty tough picture. It should be noted the median price of a Southern California home, that's the price of the midpoint of all sales, hitting $743,000 in the month of July, rising for the fifth time in 6 months, according to CoreLogic's report that we got today. Ventura County's median hit a record high, by the way, of $813,000, and San Diego County's rose to a record $850,000. Sales, meanwhile, taking a dive, by the way, in the face of all this, and that certainly that slow activity you just mentioned, Jeff, is reflected in that reading. And what else are you picking up anecdotally out there about where things are going from here? Obviously, the hot labor summer continues. You got a lot of people out of work right now in the entertainment industry. Is that starting to impact things here now?
I think it is, Frank. I think it is impacting a lot. And to your point, or to your question, I think if you are in trouble financially, if you're bleeding money, if you're running out of savings, you got to beg, borrow, steal, borrow money from your retirement plan. If you have a mortgage, talk to your mortgage servicer about forbearance or something. But don't put your head in the sand. If you have a problem, get your house on the market. Better to walk away with some equity than no equity. And if you are on the buy side, if you are looking to buy something, I think between now and Christmas, you should be Hawkeyes. You should be peeling through all those listings, those new listings, start talking to people, knock on doors in the neighborhoods that you want to live in, because there are people out there financially stressed. I'm starting to get those calls again. I've been doing this 37 years, so I see the trend lines for decades of doing this, and I'm getting those calls again. So be ready to pounce. Full price offer, just get it off the market, and you might get yourself a bargain really soon.
For people that are struggling to pay the mortgages nowadays, what advice and what help is available nowadays, given what's going on, and how late do you have to be here to get some consideration? And just maybe give us an update on how people can get some help.
Well, first of all, don't be late. That's the first thing, because if you wait until you're late during the Great Recession, there's so much bad advice going on out there. People ruin their credit because they thought they had to be late before they could get help. So you got to go talk to your loan servicer right away. Fannie and Freddie have been really good. I mean, at least during the pandemic stuff, they were super great. I was just checking that lately. So, contact the servicer. If your loan isn't owned by Fannie or Freddie, FHA and VA, they have generous programs. Depending on your circumstance, I mean, you're going to have to prove your struggles. You can't just say, I can't make my house payment. I think you're going to have to back it up. And then if it's not Fannie, Freddie, or FHA or VA, these exotic loans, you're sort of at the luck of the draw with those investors. Some of them are willing to help and some won't. But the bottom line is the less equity that you have in the property, the more danger it is. The more equity, the more options you have, which it means getting a second against your house or selling the house or even getting a relative to, go in with you on it and do a refinance with somebody and maybe they'll give you some money.
Jeff Lazerson, the president of MortgageGrader.com, also Orange County Register real estate columnist, and we'll be looking for your column this weekend. Jeff, thank you very much for taking the call here this evening.
Thanks for having me, Frank.
Thank you very much, Jeff. Folks, Innovation Refunds has been helping small businesses that qualify get a business payroll tax refund through the Employee Retention Credit, also known as ERC. It's Frank Mottek here. The ERC is a tax refund for businesses that kept employees on payroll for parts of 2020 and 2021. If you own a business with more than 5 employees, you could have money waiting to be claimed. The ERC tax filing is very complex. Innovation Refunds independent tax attorneys help your business's claim stay compliant with the IRS regulations and the guidelines. Now, if your business faced challenges during the pandemic that it would not have without pandemic government orders, you might be eligible for a substantial refund. Go to innovationrefunds.com to see if you qualify. Innovation Refunds has hundreds of 5-star reviews on Trustpilot, Google, and they're accredited by the BBB. No upfront fee. They don't get paid unless you get paid. InnovationRefunds.com or call 1-843-REFUNDS. Again, that's 1-843-REFUNDS. Innovation Refunds does not provide tax or legal advice. They work with an independent network of tax professionals and will share information with them to evaluate and process your claims. Terms and conditions apply. Mottek on Money continues here in 790 KBC. More arrests are being made in connection with those high-profile smash-and-grab robberies we've been seeing lately at high-end shopping centers in the Los Angeles area. This after a task force was created to specifically address the issue. This involves the LAPD, the LA County Sheriff's Department, and a number of local police agencies, including the Beverly Hills Police Department, as well as federal agents with the U.S. Marshal Service and the FBI. Joining us live now is the Beverly Hills Police Chief, Mark Stainbrook. Chief, thank you very much for taking the call here tonight on this big issue. Everyone's very concerned about what they're seeing out there. And tell us about your participation in this important task force and tell us about the arrests that have been made recently.
Well, hi, Frank. It's great to be on your show as always. I just find it ironic that a poor public servant like me would be on Mottek with money, but thanks for having me.
Thank you, Chief.
Yes, absolutely. And we are participating in that task force. And so I think it's really important to know for everybody in Los Angeles County, every agency in the county works in really good partnership together. All the chiefs meet regularly. And so when I was contacted by Chief Moore at LAPD and they asked us to put somebody on the task force, we did so immediately. And we also participated in the Follow Home Robbery Task Force about a year ago, which was very successful in taking down a lot of the robbery crews that were doing follow home robberies. So we've already started seeing some success, and a lot of that's based on that we share intelligence, we share information. And Frank, we sort of know that the same criminals are hitting over and over again in different cities. So it's not surprising that we're arresting the same people over and over again. But we're being very successful in that part. We just need some help, keeping these folks in jail and making sure they get charged and that they stay in jail. So very proud of our officers and the work they do, and very proud of the partnerships we have with other agencies in the region.
On the air live with the Beverly Hills Police Chief, Mark Stainbrook. And Chief, let me ask you, for the business community out there, and I know your police department slogan is police and community together, and that includes the business community. What is your advice for business folks who are seeing these videos and experiencing these terrible shoplifting and smash and grab incidents? What are you telling the business community out there?
So we work really hard with our business community in Beverly Hills, and we go out and do physical security assessments on their businesses, and we check their camera systems, their alarm systems, how they set up their shops, and working with their security folks, and also telling them that, a lot of these criminals come and they look before they steal. They kind of do their own reconnaissance. And so a lot of times they can kind of pick up on suspicious activity and really be our eyes and ears. So working close partnership with them. But in Beverly Hills, we really have a great network of camera systems, license plate readers. We fly a drone 12 hours a day. And so if you come into Beverly Hills and commit a crime, you're going to be arrested very quickly, and we will work to prosecute you to the fullest extent of the law. So it's kind of that coordination between the businesses and all the technology we use and our officers in the field that we've been able to keep crime very low in Beverly Hills. And if you come there, you're going to get arrested if you commit a crime. I think the other day we had 3 people try to run out of a store on Rodeo Drive, and they were quickly apprehended through a combination of our technology and getting officers on the scene very quickly. And that's pretty routine if you commit crime in Beverly Hills.
On the air live with Chief Stainbrook from Beverly Hills, and usually that's the way the story ends when we hear of incidents of crime. It ends with an arrest, but as you mentioned, what is the situation? Is it a catch-and-release situation now? We had Rick Caruso on this program 24 hours ago. He called for a change in the laws, given what's happened recently at Americana at Brand, and he's very concerned about what's happening with essentially catch-and-release going on at the moment.
Well, it's a long story, right? 10 years ago, if you go back to Prop 47, a lot of the nonviolent crimes, they really reduced any penalties on those. And I'll leave it to the people to look at who authored that bill. But going forward, there's a number of other bills over the years that have really taken down what we can do to people who commit nonviolent offenses. And so, again, because they haven't been prosecuted for some of the more minor trespassing, theft, vandalism, those things, they've graduated to more and more serious crimes. And I talked to the other chiefs. I was just talking to Chief Bermudez from El Segundo the other day, and we're constantly seeing repeat offenders. So they had a burglary suspect the other day they arrested. A week before that, he had been arrested in Redondo Beach for stealing a car. So they're not staying in jail. And I think one thing the public has to be educated on is starting October 1st, the LA County court system has come out with a new schedule for people who are arrested. And most theft offenses, vehicle code violations, offenses against property, theft, vandalism, those kind of things will be called cite and release or book and release, where they won't even go to jail before they appear in court as they usually do for arraignment. They'll be put right back out on the street to reoffend. In some cases, things such as firearms, sexual offenses, violence against children or the elderly, they're going to do what they call magistrate review, in which a judge will decide if they go to jail and await arraignment or if they're released on their own recognizance or with some other conditions. So it'll only be really serious and violent offenses that people will stay in jail after they're arrested. So I think the public needs to know that, because you're going to have criminals being re-released right into the street after October 1st, right back to commit more crimes. And again, what I'm trying to explain to people is we're seeing the same people over and over again. Atlanta just did a study where they showed that the same 1,000 people commit about 40% of the crimes in Atlanta. And I have no doubt if we did a similar study in LA, you'd have a very small number of people who are committing most of our crimes. So I think we really need to rethink about how we focus on our career criminals and our repeat offenders.
Chief, you command the utmost respect. I know certainly in Beverly Hills and throughout the region, and what you're doing in Beverly Hills is, I know a lot of people are trying to do what you're doing there to fight crime, and we're going to keep an open line to you and look forward to many more conversations on all of these important subjects here. Thank you very much for joining us live here this evening.
Well, thank you, Frank, and I see you at a lot of our events. You're an amazing supporter of the Beverly Hills Police Department and law enforcement, so thanks for everything you do for us.
Thank you very much, Chief. We do appreciate everything you're doing here, and we salute you for all of your service here in Beverly Hills, as well as your service to the U.S. as As a lieutenant colonel in the Marine Corps, you're absolutely amazing. Thank you very much, Chief Mark Stainbrook, the Beverly Hills Police Chief, live with us here this evening. Mottek on Money on 790 KABC.